What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Monday, June 3rd. All right, guys, Nvidia stock back here on Friday, finishing out this last week and heading into a new week, down $8.67 per share. That's minus 0.78% in regular trading hours, up about a little over $5 in the after hours. But as always, volume in the after hours quite low, so take that with a grain of salt. Listen, let's take a look at Nvidia and get the absolute best image we possibly can of potentially what to expect here tomorrow as we start a new week. We'll take a look at the volume profile, try to pull out any directional bias that we can out of there. We'll look at the psychological trading levels, implied volatility. We'll look at the expected move, and we'll finish out with the directional bias coming out of the chain for tomorrow. So let's get started here with that directional bias analysis here on the volume profile on the 5-minute chart. Listen, guys, by the way, Nvidia is a daily upload. I cover this stock every single day. If you appreciate that, if you appreciate the daily analysis, please hit the like button. Helps out tremendously, and I greatly appreciate it. But not only that, it also does make your life a lot easier, so you don't have to search out these videos ideally every day. It just tells YouTube, hey, drip in the videos I care about. And in exchange, I will keep feeding the Nvidia analysis daily. So let's take a look under the hood here and see what we can find. Now, first of all, I would say a small to moderate red day here. So if you're a bear, what would you want to see? You would want to see at least minimum small to moderate bearish bias to support that downside move when we look at the volume profile. And if you're a bull, obviously bullish bias would be great, but a small to moderate red day, we can't really expect too much of that. So ideally, the next best thing is just no bias whatsoever, because then you don't have bearish bias supporting what already happened. So let's look under the hood and see what we ended up with. Very normal open, volume fades. Volume starts to increase, but we're seeing increases on both the red and the green sides, okay? Volume fades throughout the day. Listen, guys, maybe 5% bearish bias there, which is the lowest I'll ever assign on a 0 to 100 scale. I typically don't assign anything lower than 5. So I'll just throw that out there because there's really nothing here. As we head into the close, this looks very scary. Understand, guys, that is the first bar after the closing bell. So you know what that is? It's cemented when you look at it this way. Notice how there's very little movement with a few wicks on the actual candle, but it's somehow over 6 million shares of volume, 6.5 million plus. That's a rebalancing bar, right? Algorithms trigger a lot of buying and selling, pumps up the volume, very little actual movement. I ignore those most of the time, whether they're green or red. Okay, so I know that there's probably a lot of bears. If you're in like maybe our free Discord, or you're in a chat room or whatever you might be on, you might see some Nvidia bears boasting about this. Oh, did you see that huge red candle over 6.5 million shares within 5 minutes or whatever, right after the bell on Friday? It's rebalancing, okay? So, bulls, really not much here. Maybe 5%, if that, bearish bias in the middle of the day here. Bears a little bit disappointing. Bulls, the bears won the day, but bulls, when we look under the hood, there's really not a lot to support that bearish movement. Okay, so let's move on. Let's take a look at the psychological self-fulfilling prophecy levels, trading levels that we need to be aware of here come tomorrow, Monday. Starting with the 30-minute chart, the white line's the 50 period, the gray line's the 200 period. We keep it very basic. Why? I think you guys will find that a lot of you are probably at this point already. The longer you trade, the less complicated your charts look. You tend to use things that feed on the psychology of others, whether it's just a very popular level like these are, or maybe you have like the plus or minus 2 standard deviation volume weighted average price bands on a 1-minute chart. I've used that for years. It's psychological, not only because quite a few people use that, but also when you start, I'm primarily in a lot of my scalps, especially on blue chips, I'm a reversion trader. at least on the blue chips. Okay, not like in play. In play, I'm just a momentum trader, scalper. On those, I'm scalping like little psychological pull-ins to psychological levels because I know it's a lot of human traders in in-play stocks. It's actually relatively basic. I'm just catching the wave of momentum, understanding the psychology of a human-dominated stock in that moment. That's in play. With blue chips, I'm just playing the psychology. So like the volume-weighted average price bands, not only do a lot of people use them, right? But I know that when you start pulling 2 standard deviations away from volume-weighted average price, which is probably the most common indicator in the world, at least on the 1-minute chart, right? You tend to see a lot of reversion traders entering and a lot of momentum traders exiting, okay? So I tested 1 standard deviation back in the day. I tested 3. 2 I found was like the perfect balance of high-quality trades and a decent enough quantity of scalps. My point in bringing this up is that in the short term, it's all a self-fulfilling prophecy, guys. It's all psychology. That's why the charts look so simple when you start getting to the higher levels of traders. So if you remember back on Thursday, guys, we were talking a lot about how we had given up that 50 period here on the 30-minute and faded downside. Listen, in the pre-market on Friday, we attempted to reclaim that. We rejected hard again right off the open. A sloppy test downside of the 200 period. Okay, it was sloppy, but bulls, we were able to hold that and pull that off. We weren't able to make another upside test to the 50. Fine. So we now find ourselves in a collapsing channel on the 30-minute. And listen, guys, tomorrow's going to be a battle. Okay, this is very likely to make a decision here tomorrow on the 30-minute chart. Bulls, any test of the 200 period, we want to use that as support. The goal, rip up through the 50 on high volume, retest it on low volume, bounce on high volume. Claim that as support and get up out of this channel above both. Bears. For you guys, how do you win the day on the 30-minute? Any upside test of the 50, you want to see that reject, and the goal, high volume downside break through the 200 period, low volume retest, high volume rejection, get down beneath both of these levels, claim whichever one's lower at the time. In this case, that would be the 200 period, but these, of course, are moving, so it'll be moving tomorrow as resistance. That's how you bears win the day. Bulls, obviously, that's what you guys wouldn't want to see here tomorrow on the 30. Now, let's move on here to the 4-hour chart and take a look. You can see here that we're still about 6% away, 5.9, maybe 6% away from a retest of the 50-day moving average here on the 4-hour. Guys, listen, since we made that move off earnings, the 50 period has actually moved upside quite a bit. We've gone basically from like 9.25, like 925. We've gained over 100 points on the 50 moving average on the 4-hour chart. You know, bulls, that's not a bad thing to see. Why? Right? We want as many psychological potential areas of support as close to the stock as possible on an upside move. And the same is true for bears with potential areas of resistance on a downside move. Okay, so, but that 50 period takes time to catch up on the 4-hour chart. It's a slower moving average, especially than on the 30-minute. So the fact that we've made that much progress is good. That's really all I'm watching here. If the stock were to tank off, yeah, all of a sudden the 50 is a huge area of interest that I'm paying very close attention to. But for now, bulls, if we can get that 50 continuing upside, claiming ground, that's great. Now, the most important chart of all, guys, the daily. And a lot of you, if you've been watching even just a couple of the videos here, you probably know what tomorrow is the battle of, don't you? It's clear. Tomorrow's the battle of $1,100. Guys, from Thursday to Friday, we gave it up, right? The bulls gave up $1,100, but not to a large degree, not at all. And what's interesting here about 1,100 is that post-split, that becomes 110, which is still just as much of a psychological level, right? So the nature of this split keeps all the psychological levels basically of the same importance, so it makes doing the analysis very simple, okay? Even for a beginner. So ideally though, pre-split, we would be on the correct side of as many psychological levels as possible that fit your bias, whether you're a bull or a bear. What I mean by that is if bulls, if we can claim 1,100 here and get back in the 1,100 to 1,200 channel and maybe start using 11 as a trampoline to kind of start pushing our way up toward 12, that would be beautiful heading into the split because that would turn into 110, 120 bears. If you guys can start rejecting hard off of 11 and heading down toward 1,000, That puts you in the 1000 to 1100 channel, which becomes the 100 to 110 channel. And now you're in a completely new channel heading down toward 1000, which becomes 100, just as big of a psychological level that you bears would obviously love to give up to the downside, because that is a, let's say, morale booster among your peers as bears, and that would discourage some short-term bulls. Bulls, we obviously don't want to see that happen, so let's just hold 1100 bucks a share and call it a day. Now, implied volatility here, down a little bit back on Friday. So now in comparison to the last week, you know, honestly, we had 3 days here. Because remember, last week was a short week. So by the time tomorrow comes around in comparison to the last week, if IV's still in this same range, which it might not be, but if it's still around this area, it's about in the mid-range compared to the last week. Okay? In comparison to the last, because it really didn't move much last week. In comparison to the last month now, we are definitely in the lower to mid-range or mid to lower range, just because we only spent a couple of days way down here, so it makes the chart look a little different. You have to consider the amount of days spent in a region, right? It's not just like where it is in relation to the line. It's the amount of days, really. So we're in the lower to mid-range in relation to the last month, and compared to the last 3 months, I would say we're in the low to mid-range, because again, only a couple days spent way down here. That's throwing off the look of the chart. All right, so understand where this lies in comparison to your intended trade time frame. Very important if you're trading options. Don't overlook this. Now, expected move here tomorrow. We, of course, have weekly expirations to work with on Nvidia, so with a little bit of educated guesswork, we can pull out tomorrow's expected move. So the expected move by Friday's close compared to this last Friday's close is plus or minus $61.07 per share. Here's how we get tomorrow. Divide that by 5 trading days. Monday, Tuesday, Wednesday, Thursday, Friday, right? Add back 50%. The initial divide by 5 assumes all red days or all green days. That's a silly assumption. So with a little bit of educated guesswork, again, in this current market, I'm adding back 50%. Tends to be the most accurate on most days to add back that volatility that we need to add back. And that gives us a plus or minus expected move of approximately $18.32 per share by tomorrow's close compared to Friday's close. That's the one standard, with a little bit of educated guesswork, that's about the one standard deviation expected move being priced in by the market for tomorrow. Now remember, if you disagree with that, that's actually a good thing. You don't want to always agree with the market, because if you always agree with how the market was pricing a stock, there would be no room to take a position, right? So think of the expected move as like the baseline, the same way as the current price of a stock is kind of like the baseline. If you buy a stock at a price, you disagree with the market and think it should be priced higher, right? If you short a stock at a price, you disagree with the market and think it should be priced lower than it currently is. Same thing with IV. And when you start combining your expected move assumption that disagrees with the market or opinion with your directional bias, when you're trading options, all of a sudden you have 2 factors that you can put in your favor depending on how you position yourself, and that becomes very powerful, right? Just a directional bias when trading options, guys, it's not enough. You need to also have an opinion on the volatility. Now, what you might be thinking, what about directional bias though? Let's take a look. Almost 2.5 million contracts traded here back on Friday. Of those, 1.37 million were calls and 1.09 million were puts. So we are seeing a bit of a call side bias on the overall call put ratio back on Friday. Now, if we break that down by time frame and we go the 0 to 20 delta range, the short-term speculators, 602,000 calls, 483,000 puts. Again, bit of a call side bias out of the short-term speculators as well. Guys, listen, if you want to get my daily scalp setup alerts in play, my in-play stock alerts, those, by the way, I think a lot of you guys don't necessarily know what that means. To me, an in-play stock is it's like the hot piece of equipment on the playground. It's a stock that fits I've gone over this on the main channel, but it's a stock that fits a very specific set of criteria, usually a fresh news catalyst, elevated relative volume, a small enough market cap so that it drives away algorithms because they can't put enough money to work, so naturally it doesn't make much sense for them to be there, but a large enough market cap where that the spread on the stock tightens up enough because it attracts enough liquidity and it gets on enough people's radar to actually be in play. But the spread, meaning the bid-ask spread, it can't be so tight usually that it doesn't allow for quick moves. Because when a spread widens out, it's like you're moving the rungs of a ladder out. Okay, so each order is making a bigger jump in the price, so it allows for quicker moves typically. It's a very specific set of criteria, and I have to find them for my own trading. So what I do is when one of these stocks pops on the radar, I just alert it to the group. So it's, you know, you can treat it like your scanner if you'd like. Because to find these stocks is surprisingly very expensive and time consuming. So anyway, guys, if you'd like to join the private community where all that happens, take a look at that link in the pinned comment. That link will let you get grandfathered in at the current rate before the price goes up here in the very near future. I appreciate it, and I'll see you in the next one.